May 15th is going to be the day, boys and girls. That is when our new Fed, Kevin Warsh, is going to be taking the gavel. And we're going to see what's going to go on. We're going to kind of go through his potential playbook. Now, I'm going to encourage you to, of course, go data, research all of this stuff. I am not a lender. I am a real estate agent, a real estate coach and trainer. But these are some things to think about in regards to what's going to take place for buyers and sellers in the overall industry. So let's break them down. The dual descent strategy, which is kind of fairly interesting, actually. It's a policy that's going to be cutting short-term interest rates while simultaneously shrinking the Fed's, 6.7 trillion balance sheet. That's a big number, lots of zeros on that one. So what's going to do there is it's going to lower the borrowing cost for like credit cards and short-term loans. But when it comes to selling federal bonds, it potentially is going to drive up the rate a little bit, which is going to keep the mortgage rate and the auto rates somewhat higher for a little bit longer. That's potential number one. Number two is going to be AI productivity pivot. So a lot of words there really quickly, but basically what it means is this, is that we've never really seen an era of productivity that AI is providing and how it's expanding exponentially right now. He's thinking potentially, or the speculation is that he's going to let the market run hot, ignore the traditional, models that the old Fed, because it's going to be a new Fed, have been running. He actually thinks they're deeply flawed, and he really kind of wants to see them tweak a little bit. And he wants to run off the framework and prioritizing kind of structural growth, not just data on a monthly basis that just makes a lot of noise. Last but not least, the smaller but active Fed. So basically, essentially, he wants to stop keeping everybody independent. He wants to work closer with the Treasury Department. And when he's working closer with the Treasury Department, a lot of the folks are saying to the fact that, like, well, that's not going to work out because, the Fed wants to do this, the Treasury wants to do that. And he's like, guys, the Fed, number one, needs to stop being like the emergency responder to our economy. We have to fix, systemic issues that are going wrong here. So I don't know what's going to happen. Critics say he's nuts. Supporters say that they're finally going to get the ship, right. They're going to right the ship at long last. This is going to be a bumpy ride. Stay in tune, talk with your lenders, make sure that you guys obviously understand this on a deeper level, and then communicate with your buyers and sellers. So anyway, guys, hope you had a good one on this one. This ran a little bit long, but it's a little complicated. So enjoy, have fun. I'll see you guys on the next video. Bye.